Afternoon, everyone, and I hope you're all well. And certainly where I am, we just had a hail shower about 30 minutes ago. So that was something a bit different for today. Anyway, welcome to the second of our two webinars on the new charity Sorp. So we've got two presenters today. Myself, Andy Jones, I'm associate partner in the not-for-profit team here at Cooper Parry and head up our education sector work. And then I'm also joined by Glenn Bott, another associate partner in our NFP team, and he heads up our charity sector work. So in today's webinar, Glenn's going to start things off, and he's going to cover off some of the key terminology and tiering structure of the new charity Sorp, and then take you through module 1 of the new Sorp, which essentially covers the expected content of the trustees report. I'll then take you through a bit of a deeper dive into some of the key areas where there are changes in the trustees report this year, and a focus on those areas, some practical examples of what you'll need to do to comply with some of those new areas, and how you can really bring some of those new areas, particularly around impact reporting, charities finances, reserves, and sustainability, how you can bring those areas to life. We'll then finish off the session with a Q&A session. If anyone has any questions during the webinar, then if you could please use the chat or Q&A function and just post the questions in there, and we'll deal with those questions at the end. We will try and get through as many of the questions as we can at the end, but if we are inundated with the questions and don't get time to go through them all, we will follow them up after the webinar with a Q&A briefing. So without any further ado, I will hand you over to Glenn to get you started.
Thank you, Andy. Hello, everybody. Hopefully you can hear me better. Anybody who attended the webinar last week, I think there were some sound issues. So I'm now rocking a very fancy set of headphones with a microphone on, which hopefully will improve the sound quality. But yeah, as Andy mentioned, so I'm going to take you through the trustees annual report, which is module 1 of the new Sorp. It's very much going to focus on some of the changes that are coming from this Sorp and things you need to think about when you're writing your trustees report for next year. So again, for those that weren't here last week, just a very quick reminder. So the new charity Sorp was published on the 31st of October 2025, and it will be effective for periods commencing on or after 1st of January 2026. So assuming you have a normal yearly set of accounts, the first accounts that will be under the new Sorp will be the 31st of December 2026. Again, the Sorp is still a modular Sorp, which how the old Sorp was as well. So there's 29 Sorps in total, modules in total. And last week we went through module 5, which was income recognition, and module 10 beyond leases, being two of the areas with the significant changes from the old Sorp. And then today's webinar is very much going to focus on that module 1, so the trustees annual report. So something the new Sorp's introduced is a tier reporting structure. So very much focused on trying to reduce the kind of administrative burden for smaller charities, and to ensure that it's only larger charities that are having to include a certain level of detail. So there's 3 tiers that have been introduced by the Sorp. So tier 1 is for any charities that have gross income up to £500,000. Tier 2 is for charities with income between 500,000 and 15 million. And then tier 3 is gross income above 15 million. And by gross income, they ultimately mean that the total income and resources of the charity during that financial period. So ultimately the total income that you're showing in your statement of financial activities for the year. This is the sole measure that they use in defining the size from the tier reporting point of view. So it doesn't matter how big your balance sheet is or how little your balance sheet is. It's very much this gross income figure that will decide it. And there's also no kind of transitional 2-year rule around it. It's very much what your level of income is in that particular reporting period defines which tier you fall into. So where if you're on the threshold of a particular rate, you could be from 1 year to the next, either in tier 2 or tier 3, if you're hovering around that 15 million, which could leave that sort of little unusual situation where you have different requirements to comply with each financial year. The tiering, mentioned earlier, there's 29 modules within the Sorp. So the tier reporting only actually impacts on 5 of those modules in terms of where there's changes for the tiers. But arguably the module that has the largest impact from what tier you're in is the trustees report. And that's what we're going to cover today. So this isn't a new thing within the Sorp this year, but thought it's still something that's worth a quick reminder on. So within the charity Sorp, they use a number of terminologies. So must, should, and may are sort of the 3 key ones that they use. So where there is a must within the Sorp, this is something that the charity has to comply with in order to be compliant with the Sorp. These musts are typically driven from the underlying accounting standards. So FRS 102, if it's a requirement from FRS 102, then it's a must within the charity SORP. And they'll relate to things like accounting treatments or disclosures or presentational requirements. So things that need to be included for those accounts to show a true and fair view. Should is then something that in the charity commission's point of view, this is something that should be included to kind of advanced standards of financial reporting, kind of good practice to be included. But they do say that if it's not included, it is not considered to be a non-compliance with the charity SORP. So you can comply with the charity SORP if you do not include these items that are included as a should within the SORP. And then the final terminology is then may. And this is typically used where there's either a choice in terms of an accounting treatment. So you may do something one way or you may do it the other. But also where it's quite a low requirement. They say, ideally, in an ideal world, you'd include it. For some charities, it may be relevant. For others, it may not. So almost sort of the lowest level of whether something needs to be included or not. You've got the more flexibility around that may one. So before I get started into the actual kind of detail and content and the headings, just a quick overview of the Trustees Annual Report. So the purpose of the Trustees Annual Reports, and this is directly from the SORP, is to ensure that the charity is publicly accountable to its stakeholders for the stewardship of the funds it holds. I always think of the Trustees Annual Report as being sort of the narrative and telling the story of the charity and how it supports the numbers and what's happened during the year. So sort of telling what the charity's been set up to do, what it's actually done during that year, and then what its future plans are, what it hopes to do in the future. And then provides an overall context to those financial statements and the numbers that have been reported. There's 2 underlying questions that need to be considered throughout the whole of the Trustees Annual Report. So things that should be at the forefront of your minds when this report's being written. And that's looking at who are the users of the report. So who's going to be reading this? And then what are the information needs of those users? And these users can vary from charity to charity. Could be funders, could be donors, could be your beneficiaries, any other stakeholders. But just thinking about what information would be useful for them when they read that report. In terms of who should prepare the report, so the clue's in the name there, a trustees annual report. So although the trustees are ultimately responsible for approving that report and signing it off, they will quite often seek assistance of the charity staff. Maybe that's the CEO or even the finance team or different team members for different parts of the report. But ultimately, it is the trustees that have that overall approval. And then the final comment from the SORP says that the report should be a fair, balanced, and understandable review. So fair, ultimately meaning that it's not misstated. It is telling the truth throughout the report. Balanced, saying that it's not just the good stuff that you should be reporting as part of here, but also where there's been any issues or challenges during the year, and they're making sure that they're given sort of fair screen time as well. And then understandable. So a layman who's reading this, would they be able to understand what it is that you're trying to say as part of this review? So all key things just to keep in mind when you're writing that report. This is an exceptionally useful table that is included within the SORP. So down the left-hand side, it's got there the key headings that will be included within that trustees report. And then the following columns then show, depending on which tier you're in, which of the paragraphs within module 1 you need to comply with or are relevant for you as a charity when writing your trustees report. As you'd expect, the sort of tier 1 has the fewest paragraphs to comply with. Tier 2 and 3 then add on to those ones within tier 1, then have some other considerations as well. Down that left-hand side, a lot of those headings should hopefully be familiar to you. They're very much the same as the old charity SORP. The only one that's brand new is the bottom one, sustainability. We'll talk about that a little bit later on. And the only other one to pick out on here, plans for future periods. That used to be a requirement for what the old Sorp classed as large charities, which was any charities with more than 500k of income. If you were below that, you didn't need to include plans for future periods. Now that is a requirement for tier one. So if you are in that smaller category, that should be a new heading for you this year if you didn't voluntarily disclose it in previous years. So the first section, objectives and activities. So there's been no fundamental changes from the old Sorp in this area. So each of these areas that I'm going to talk you through, a lot of it should hopefully just be a refresher in terms of what should be included in these, but I will pick out where there are changes from the old Sorp as well. But section one, objectives and activities, for all tiers, so all charities, regardless of their size, have to produce a summary of the purposes of the charity and then also the main activities they've undertaken to fulfill those purposes. For charities in England, Wales, and Northern Ireland, where they have the public benefit requirements, they need to include a statement ultimately confirming that they've had regard to the Charity Commission's guidance around public benefit and explaining how their activities then fulfill that public benefit requirement. There's a requirement for all charities to talk about the scale and nature of their volunteers and the impact that they've had during the year. Andy's going to go into this in a little bit more detail in his section later on, but it is a requirement for all charities to include. Then finally, explaining activities, projects and services identified in the accompanying accounts. And this is where that important piece is where you're linking what's actually happened during the year and the finances and the numbers and the projects and linking them back into that objectives and activities piece. So trying to have that direct correlation between sort of the narrative that's included and what's actually happened in terms of the results for the year. The only change for tiers 2 and 3 is when they're looking at those objectives and activities, it's splitting them out and explaining them between both the shorter term and the longer term. So as all charities have to include their objectives, that this gives a real focus in terms of a strategy and what's going to be taking place, or what's taking place in the current year, what you've got coming up in sort of the next year, and then longer term as well. Where do you ultimately want to get to where potentially the services of the charity are no longer required if you have fulfilled your overall charitable objective? To help charities meet the requirements of each area, the Sorps introduced a number of prompt questions. So these are questions and things for the authors of these reports to think about. And ultimately, if you've written this section very well, then all of these questions should be answered as part of that. So got the questions there. I'm not going to read them all out to you, but these are the things that they've included within there. So if you read through these questions, it gives you a good feel for in terms of what content do you need to include in that trustees report to be able to have that compliance with the requirements. It does also mention that there's some areas where these need to be included if they are material to the charity in terms of what your activities are. So if you're a grant making charity, if that's a big part of the service that you provide, then you need to include some explanation around the grant making policy that you have and how you select sort of the grant recipients and some of the criteria you have as part of that. And then also where you have any social investments. So you need to have an explanation of your social investment policies and ultimately explain how those social investments have contributed to those overall objectives and activities that you have as a charity. The next heading is achievements and performance. And again, this is another section that hasn't seen any real significant change to what was required under the old Sorp in terms of the actual content, but in terms of how it's reported, there's some sort of new suggestions within there. So again, it's got a couple of prompt questions. So how's the charity's work made a difference to the circumstances of its beneficiaries? And then how has the charity's work provided any wider benefits to society as a whole? So very much trying to get you to think about not necessarily the individual activities that you've done, but what's been the benefit of those, what's been the impact is kind of the key word that comes out of this, demonstrating how those services are actually impacting what you do going forward. For tiers 2 and 3, there's a bit more detail required in terms of how those individual achievements have fulfilled those aims and objectives that were set in that first section. So having a real linkage to what you're doing and how it ultimately impacts on your objectives and aims. If you have any material investments within the charity, then they must be reviewed within this section. So looking at your investment objectives, what's been set out, and then how have those investments performed against them during the year. And then a real key focus in this Sorp, it comes out quite clearly, is the fact that you have to focus on the actual impact that the charity has made. I mean, ultimately, you could argue impact is kind of the biggest measure of how well a charity has performed, what that impact has been. And Andy's going to spend a bit of time going through that impact and how you can demonstrate that, and what some tips for including that within your trustees report in his section. And then for tier 3, so for the very largest of charities, they also need to report on their performance of any material fundraising activities that they have, and then compare those against the fundraising objectives that they had. And then if there's material expenditure incurred in raising that fundraising income, then the report must explain the effects this expenditure's had, and what it's intended to have on that net return from fundraising activities. So the next section, financial review, and this is where there have been some significant changes to what was in the old Sorp. In terms of the definition of reserves, and this is something that I think is a really good improvement in the new Sorp, sort of see quite a mix, quite an inconsistency across what's included in a trustee's report around reserves from one charity to the next. So I think this Sorp has certainly looked at how do you calculate that reserves figure and what narrative should be included to try and get a bit more consistency across all of the charities. So in terms of the definition of what reserves are, the formal definition per the Sorp is that part of a charity's income funds that's freely available to spend on any of the charity's purposes. And they give a very detailed calculation about what should and shouldn't be included as part of that reserves. So the starting point for calculating reserves is the amount of unrestricted funds held by a charity. So nothing's changed there. But some of those unrestricted funds may or may not be readily available for spending, so may need to be excluded from that reserves figure. And they give some examples there. So fixed assets, so where you've got unrestricted funds, but they're represented by the land and buildings that you may be operating out of, you couldn't use those funds without having to sell the property. Therefore, it's not something that should be included within that reserves figure. They also talk about investments. So this will be long-term investments where you're holding them for their long-term growth or for them to provide investment income. They're not available for spending. Where you have any designated funds, so where when the trustees have ring-fenced a particular part of those funds that can only be used for a particular purpose, they should be excluded from that reserves figure. Then it also talks about considering commitments that have not necessarily been provided as a liability in the accounts, but things that you know you're going to be spending in the future, they can be considered and deducted from that reserves figure that you're carrying forward as well. There's a few other items that they include in their calculation. So restricted funds, in some cases, they could be used to reduce the reserves if you know that a key part of your funding is going to be provided by that restricted service, so you don't need to hold your own reserves for it. And then also expendable endowments or pension provisions, any other long-term lease liabilities, they can all be considered as part of that figure as well. But hopefully we'll give a bit of clarity in terms of when you're trying to understand what your reserves actually are, what things should be included as part of that. So I think that will help. As to what you then need to include in your trustees report, so what they say is that the reserves figure that you include in that report must be consistent with the accounts. You've seen there's quite a detailed calculation, so it may not be directly obvious what figure you're quoting as your reserves versus what the bottom of your balance sheet looks like from the reserves. So what it says, it has to be consistent, but if it is not directly comparable, i.e. you can't see that number in the bottom of the balance sheet, then you do need to provide a reconciliation, so explaining how that reserves figure is calculated, so explaining what you have added in or deducted off of those reserves funds to get to your overall reserves figure. For tiers 2 and 3, they also have to include details of any significant events that have impacted on that financial performance and financial position of the charity during the year. And the one point they focus on in there is the principal sources of income that the charity has. So looking at how those resources have been spent to ultimately tie in again to those key objectives of the charity. saying what income have we had in and how have we then applied that income to fulfill our objectives. Two slight tweaks within the financial review section. So firstly, in principal risks and uncertainties, here they've added in two new items. So environmental issues and cyber were not mentioned in the old SORP, that with sort of the changing of needs of people, of users of the accounts, and also the risks that have come in from cyber. These are things that they're now saying that they would expect to see as part of that risk and uncertainty consideration. And then in terms of any investment policies, they now, where you have any social, environmental, or ethical considerations, previously this was a should, that you should include them within your investment policy narrative. Now it's a must. So if you do have any investment mandates where you say you don't want to invest in certain sectors, this now needs to be commented on as part of your trustees report. And then for the tier 3, so again for those larger charities, financial review also has to explain any factors that are likely to affect that financial performance or the position going forward. So for tiers 1 and 2, it's very much a focus on what you've done this year. Tier 3 has to almost do that forward-looking, what's coming down the line that's likely to impact on that position and performance that you've had from a financial point of view. So the next heading, plans for future periods. As I mentioned earlier, was kind of an option for the smaller charities in the past. Now tier 1, it is a must. But for tiers 2 and 3, there's not actually been any changes in terms of what you need to include in this section. The SORP says you must provide a summary of the charity's plans for the future. So that's looking at its aims and objectives and then what activities have been planned to achieve them. It goes on to say that it should explain the trustee's perspective of the future direction of the charity. And what it includes within here is saying what you've done before as a charity, what experience you've gained from the activities that you've undertaken, any lessons that you've learned, how has that influenced those future plans that you're bringing in and what you're going to look to do in the future. So almost bringing the reader on the journey and saying in the past we've tried doing this worked really well, we're going to do more of that. This didn't quite work, it didn't quite fulfill the objective as we thought it would, therefore we're going to be trying something else going forward. But really sort of telling that story about how the charity's developing or looking to develop as they move forward. Next couple of sections are kind of more administrative in nature. So structure, governance and management. There's been no changes here, but just as a reminder, regardless of the size of the charity, you need to include details of the governing document. So that's a trust deed, articles of association, royal charter, how the charity is constituted, i.e. is it a standalone charity, is it a charitable company, is it a CIO, and then commentary on how it recruits and appoints trustees, and whether there's any kind of requirements for certain members or other bodies to appoint particular trustees, but giving an explanation of that trustee appointment process. With tiers 2 and 3, they also have to comment on the organizational structure of the charity. So where it's a part of a group and it has subsidiaries, explaining how that works and how that looks. Some information around the induction and training of trustees and the policies you have in place for that ongoing training of trustees. And then also explain sort of the charity's governance and management structures. And some of the things they expect to see within here is explaining how the charity makes decisions. So which decisions are held for particular committees, where there's any delegation to either a chief executive or a senior management team, what kind of decisions are delegated downwards. Setting of pay and remuneration for the key management personnel, and how that's all managed and governed gets included here. And then where there's any related parties, so where the charity does have those relationships with other organisations, any commentary around how those relationships work, how they contribute to the pursuit of the charitable objectives of the charity overall. But this would be where that would be included. They've got the reference and admin details, and again, no changes here. But in terms of all charities, you include the name of the charity being your official registered name, but then also any other name that the charity may use. You include your charity registration number. If you're also registered as a company, then that gets included. And then if you're also a cross-border charity, you'd need to include your OSCR number if you're a Scottish charity as well. Address of your principal office gets included, and then details of all trustees. And as a reminder, that's all trustees who served during that financial period, plus any up to the period up to the date of the accounts being formally approved. So where there are any new appointments after the end of the financial year, but before signing, they should be included as well. And that's something that we get a question on quite often. For the tier 2 and 3 charities, on top of all that other information, they also need to disclose who the chief executive is and any other senior management. So ultimately, anyone who does have kind of day-to-day responsibilities delegated to them by the trustees. Auditors, both external and internal, if you have internal auditors, and then any other advisors that you have. So bankers, investment managers, solicitors, etc. also get disclosed with their names and addresses. And then the final section within the trustees report is then sustainability. So Andy's going to go through this in a bit more detail, but from a highlight level, tiers 1 and 2, just the one paragraph 1.60, just says that trustees may choose to explain in the report how the charity is responding to and managing ESG matters, environmental, social matters, and governance. So it is the kind of the lightest of the three, and it's very much a light touch approach that they'd expect here. And I think it's more a focus around what the aims and objectives of the charity are. If you're a charity that works in the sustainability kind of sector, and that's part of one of the objectives that you have, would very much expect sustainability to be at the forefront of what you're writing in your trustees report anyway. Whereas if you're one where it isn't necessarily high up on your agenda and your objectives, then sort of a lighter touch at this stage, I think is appropriate. But where you're a tier 3 charity, so where you're over 15 million income, this is where there's now a must included. So in terms of what you need to include in here, you need to include commentary on how you are managing environmental governance and social matters. And so a bit later on, Andy will go through each of those areas in turn and go through some of the items that you'd expect to be seen within there. Also worth commenting that although the sustainability reporting within the charity SORP is based on those tiers, where you are also a registered company, then there are other sort of reporting requirements from a sustainability point of view. So SECR being the obvious one. So making sure that you are still complying with those where you meet the particular large company sizes on top of the SORP disclosures. But that was a very quick run through of each of the main headings within the trustees report, very much highlighting on which tier you're in will impact on how much information you need to include in each, but also letting you know kind of the differences and changes from this year. And I'm now going to hand over to Andy, who's going to give you some more practical tips of how you then make sure your trustees report does comply with all of those items. So I will stop sharing my screen, Andy, and then hand over to you.
Great, right. I'll remember to share this time. Okay, right. Welcome, everyone. Yeah, so I'm just going to go through the few aspects of the trustees report. And I guess the first thing to say is that with the new SORP and module 1 of the SORP, the Charities Commission has kind of taken an approach of almost, really rewriting it. And that's what I've put there. It's kind of a real retake. So they've completely, well, it's largely been rewritten from the previous SORP. A lot of the content, what you talk about, essentially is still the same, but they've just rewritten in terms of some of the narrative around what they're looking for charities to talk about. And the real focus has been about kind of bringing everything together in a much more kind of coherent way, greater clarity on the trustees report, and particularly how the trustees report and the financial statements link together. That's the key theme, that there's a link in the narrative information and the financial detail. And I know, in our day job, we review lots and lots of trustees reports, and sometimes, you'll read a trustees report and think, well, a lot of what's being said in here doesn't necessarily correlate with what the financial statements are saying. Not just in terms of numbers, but just the general impression perhaps you're getting of the charity and its activities. There's not a strong linkage there. So that's been a key focus of in this new SORP. And I think as well, whilst the SORP sort of introduces some, I guess, new elements as well. I think the Charity Commission have set out that their expectation is that a lot of this information, if a charity is being, operated and governed well, a lot of this information should be readily available and able to be disclosed. But I think, and I'll come on to touch on this, the key is really going to be around having the systems and processes in place to capture that information. And yes, it may be readily attainable, but it's have we got those systems in place from the start of the year that we're going to be reporting on to capture a lot of these additional elements. As well, just something to note as well that and I kind of mentioned this, but just the SORP really explicitly sets out to remind charities and those preparing the report that the trustees report, it must provide context for the financial statements and it must be consistent with them. So as I said, I think that's kind of one of the critiques perhaps of some trustees reports in the past. I've sort of stolen one of Glenn's slides here in a bit, but just in introducing sort of, I guess, some of the key areas of the trustees report, when you come to writing the trustees report this year, those two questions at the beginning are really, really important, I think, and to stand back and think, well, who are the users of our trustees report? Obviously, there are going to be funders, and depending on the nature of your charity, that could be individual, donors. It might be, government funding, other financial supporters, charitable trusts, but also it's going to be people like the service users, people using your services. Other charities, if you're a grant giving charity, it's going to be other charities and organizations that are looking at you for potential funding. It's going to be your beneficiaries, and obviously as well, in certain sectors, it's going to be key regulators, particularly like the Department for Education and other stakeholders. So making sure that I guess really understand who are those key users of our accounts and our trustees report, and having that in mind when you come to writing that report, and that you're meeting those information needs. And Glenn touched us in this as well, that under the new SORP, they said that the trustees report should provide a fair, balanced, and understandable report. And I think that last element is the real key that they've tried to achieve with the new approach to the trustees report, is that understandability. And that comes back to, I'm probably going to say this a few times today, but that whole linkage between the narrative and the financial statements, that it makes sense. Because as I said, I've read trustees reports, and particularly when you get to areas around the financial review, that you'll be reading this and thinking, well, hang on, I'm not quite understanding what's being said here about the sort of financial results and position of the charity, the reserves. I don't quite understand where these figures are coming from. I can't see where these figures are coming from. I don't really get a feeling for, what overall position the charity is in, and what may be some risks or uncertainty going forward. And so I think that understandability aspect is really key. And the last bit is it should be a really collaborative process in preparing the trustees report. I've had to prepare a few trustees reports in the past, and sometimes it's a lonely task, but it should really be a collaborative process. It's not up to the finance director to write it with maybe a paragraph or two from the chief executive. Now with a lot of the additional requirements, you're going to need input from your fundraising team, your volunteer engagement team, client relationships, stakeholder teams. You're going to need input from trustees in putting all of that together. So it needs to be a really collaborative process and needs to be planned, early as well, because it really is going to, as I said, it's a retake. It's a chance to start afresh. Now, this table, I'm not going to go through all the paragraph section as well. What I just really wanted to highlight with this is of the key areas of the trustee report, which are the ones that have got kind of the key changes and that I'm going to talk through. So, in terms of objectives and activities and achievements and performance, um, relatively minimal changes, and I know Glenn's covered this. So the main change here is just around the sort of use of volunteers, and I'll come on to talk about that. Financial review is an area where there's a big change, and Glenn's highlighted that. And I'm just going to talk, focus on particularly around reserves and reserves policies, and what is some of the kind of best practice and good guidance around that, because that area is probably one of the biggest changes. The other key change that's completely new this year is the area of sustainability. There's a much increased focus on charities now. The nature of charities and what they do is, lends itself to ESG reporting. But now, charities are operating in an environment where ESG is under scrutiny. Funders are also looking at that. They're not just looking at the financial sort of stability position of the organisation. They're looking at how are you managing your ESG as well. So it's an important area, and not surprising that that's sort of got some renewed or increased focus this year. The other areas around plans for future periods, structure, governance, management, and reference and admin details, as Glenn's covered, really nothing dramatic there at all. So I'm not really going to cover those areas. So the first thing I'm going to cover is about objectives and activities. And one of the key changes here is just around the use of volunteers. Lots and lots of charities use a whole range of volunteers, and the first thing that all charities have to do is they've got to include an explanation of the scale and nature of the activities undertaken by volunteers and the input of the volunteers. And I think the important thing to distinguish here is between what's referred to as general and non-general volunteers. So your general volunteers are going to be those that are supporting your day-to-day activities of the charity. The non-general volunteers are more like tradespeople, professionals that are supporting your charity with I guess effectively donated services, donated facilities, donated goods. And I think that the distinction here is that with your general volunteers, you're not really allowed to include evaluate the sort of what's the income element that those general volunteers are providing your charity. You can't include that as income. Whereas with non-general volunteers, you can include that as income, but you've got to follow the requirements under Module 6 of the Sorp, which is about donated services and facilities, to be able to bring that into income. So a lot of charities, from reports I've read, a lot of charities do talk about the volunteers, but it's just here about the scale of the volunteers and also what, as I said there, what are the activities that those volunteers are involved in and what's the input that they provide. And that's where that is a little more enhanced. For your tier 2 and 3 charities, they're also encouraged to just provide even a little more detail about volunteers. Now, this is an encouraged disclosure. It's not a mandatory disclosure. So it's about, you could include volunteer numbers, the different activities that they've supported, So that's sort of what you should include. And then you may also include the actual hours that the volunteers have delivered if you track that information, or sometimes charities have equated that to a sort of staff number equivalents. I think the key with this information, though, and again, it's only encouraged disclosures there, but it's about having the systems in place to capture this information about your volunteer workforce. Capture the information and the statistics so that you can present that in the report. And again, potentially there's a bit of an overlap here when it comes down to your ESG reporting as well, and that social impact of utilising volunteers in your local community, and the impact that's having with your local community. The next section where there's a big change is achievements and performance. And although the changes in this section are all pretty minimal, the key change here is around impact reporting. So all charities have to kind of talk about the impact that they have, that they're making. But for tier 2 and 3 charities, it's a little more expanded now. And so what they have to do is talk about the impact that the charity is making to its beneficiaries and society as a whole, and also the long-term impact or effect of those activities on those beneficiaries as well. So, how do you demonstrate that? Well, the Sorp sets out some sort of what best practice here could look like. So it could be using sort of personal beneficiary or society-wide impact stories to communicate the impact. And I see a lot of charities do that. We'll have sort of personal stories, case studies, and that's a great way of being able to demonstrate impact to someone that's a beneficiary of your charity and part of society, and that you're delivering public benefit to. Another way is obviously using KPIs that you use to monitor and demonstrate the impact. And I think it's that later one that can sometimes using things like tables or infographics can really bring the overall impact of what the impact that your charity is having to light. The personal stories and case studies are brilliant, wonderful, but the KPI aspect can really just sort of shed a light on it. And I just sort of, to show an example of that, this is just an extract from a trustee's report, one of our clients that works with the elderly, and particularly those sort of at risk of loneliness or sort of vulnerable and lonely. And what this shows, hopefully it's big enough for you to see, but they're stating they're talking about their in-person services and their telephone services. So it states over the year the number of people that they've supported and the number of volunteers that have supported it. So that's that's great. And then what's really great here is it's then showing from that what's the sort of been the impact of those, in this case the tea parties, and the impact of the activity groups. Are the people feeling happier as a result of attending these tea parties? Have they made friends through these tea parties? Are they looking forward to something since joining an activity group? And being able to show that really demonstrates that impact. And I think part of this impact reporting as well is that it's going to drive being able to show trends over years. So something that's you'd be able to build into a report like this in the future is again showing what impact that's having year on year. 81% feel happier. Last year that might have been 75%, and it's being able to show and demonstrate what impact you're having and continuing to have over a period of time. The final piece around achievements and performances, and Glenn touched on this, is just around fundraising activities. And this is really impacting the larger charities, the tier three charities, where they've got to report on the performance of any material fundraising activities and how those match up against fundraising objectives. And also if there is material fundraising expenditure that was incurred in raising income, what effect that expenditures have on the net return from fundraising. And that's in the current year, but also looking ahead in future years. Like you may have actually spent a lot of expenditure this year trying to raise income, and actually you're going to see the benefits of that in future years. So again, being able to outline and explain that. And for me, a key aspect here, again, this linkage between the trustees report and the financial statements, is that classification of fundraising expenditure in your financial statements will be really important. Now, sometimes, if your auditors are preparing accounts, or you're preparing the accounts, maybe sometimes that's not been something that has had too much focus because it's kind of a detailed disclosure within the accounts. But I think, again, because of this linkage, you'll really need to focus and make sure that you're happy and satisfied with exactly what is being classified as fundraising expenditure in the accounts, and that's then marrying up to the narrative that you're providing behind that. So examples there is your fundraising team expenditure related to key fundraising events. And that's going to be important that's being classified in there and not lost within other categories. Right, the big section where there's quite a few changes, and I'm not going to go through all the changes. Glenn's really covered a lot of these. I'm just going to focus on a couple of key aspects. So the first one is around reserves. So this is and I think, again, having read a lot of trustees reports, when it comes to the reserves section, it's often a section that's not always the best. Sometimes the clarity is not as great. There's not the linkage back to the actual numbers, and it's not really quite clear to understand exactly what is the reserves policy. What are the reserves that are actually being held compared against that, and what are potentially some of the sort of risks and uncertainties around reserves going forward. So now under the new Sorp, the musts, the key musts, as Glenn's outlined, you've got to provide a reconciliation of your reserves, either as a table in the trustees report, a note in the accounts, or perhaps even a narrative note if your reserves are relatively straightforward. We're just talking about unrestricted and restricted funds. A narrative note might quite adequately explain that. But if you also have a lot of different restricted funds, designated funds, endowment funds, a lot of fixed assets, then putting that into narrative, it may be easier being able to set out a table that reconciles from the figures in your account back to what your reserves or your free reserves are. And again, I've seen a mixture of that presented in in good reports. So it really comes down to the complexity of your charity. The next bit, which is a must, and I think this is the point I've certainly seen where a lot of trustees reports don't always expand on this, is comparing. So you've got a reserves policy, you've set that out, you've then provided a reconciliation of what your reserves are. It's then comparing those reserves levels to your reserves policy, and being able to explain, once you've done that, if your reserves are less than your policy, what are you doing about it? What steps are you taking to bring reserves back in line with that policy? So that could be, additional fundraising activities, and there may be things in the pipeline that are going to enable you to achieve that. Or it could be the other way, that perhaps your reserves are much higher than your reserves policy. So again, what's your plan there in terms of sort of utilising those reserves, and particularly, that's important when you're looking at funding. A lot of funders sometimes, perception in the sector that they'll shy away from charities that have a lot of reserves. And so I think sometimes there it's really important to be able to set out, well, if we have got more reserves, this is what we're going to be using those reserves for. So a funder can see that there is a plan for utilising any excess reserves, and that they're not effectively being stockpiled. Another aspect that charities must explain is about any material designated funds or other committed funds. And again, sometimes designated funds don't get, there's disclosure in the accounts. They are disclosed separately in the notes to the accounts. There's usually some narrative around what those designated funds have been set aside for. But again, coming back to the trustees report, it's not always a lot of narrative around why those funds have been designated, what they're being held for, and also importantly, the last point here: how are those designated for funds going to be utilised? What are they being held for, and what's the likely timing of the expenditure of those designated funds, or any otherwise committed funds? If you haven't set aside designated funds, but within your unrestricted funds, you've certainly committed funds to a major project or something like that. Again, it's important to indicate that and explain in your report the likely timing around that. Now, I haven't included any examples around those, but hopefully that's just giving you a flavour of the real key aspects around that reserves policy. And it's really about giving, coming back to the point around the users of the accounts, being able to give the users of the accounts that really strong understanding of what is your policy, but what are your reserves, and how do they compare to the policy, and what kind of risks and uncertainties might there be around these reserves going forward. When it comes to reserves policies as well, I just wanted to talk about this a little bit. This is certainly an area get asked a lot of questions about by clients around, what's the right reserves policy? How do we compare to other charities? And I think the thing is that there's no one size fits all to charities. A lot of organisations might use sort of 3 months expenditure, or 5% of income, or 2 months of salary costs. There's sort of some generally accepted norms, but there's not always, I guess, a lot of thought behind why those figures, and are those appropriate for our charity. And so your reserves policy is really going to depend on the size of your charity, the nature of the activities that you're delivering, the nature of the income and the funding. If you're very reliant on grant funding, donor funding, then that reserves policy is going to have to be a bit more robust to potentially deal with some of the peaks and troughs in that funding profile. Whereas the nature of your activities is if it's heavily government funded, the risk is more around the continuity of that contract, or grant agreement, and so again, that needs to be reflected in that reserves policy. And also the complexity of your activities, the nature of the services that you're delivering. So how should you approach it? Well, the Charity Commission provides some really useful guidance, and it's been updated relatively recently. So CC19 is some really useful guidance on approaching your reserves policies. And they do, it's nicely split between some sort of guidance for smaller charities and guidance for larger charities. Now, the smaller large definition here is under the existing Sorp. So smaller charity is any charity with less than £500,000 of income. So that's kind of your tier one. Obviously, larger charities are anyone with more than £500,000 of income. So your tier 2 and 3. But essentially, the questions for smaller charities, the questions it asks is, does your charity, or asks you to work through, does your charity need to keep reserves? If it does, how much does it need in reserves? And have you got any funds in reserve at the end of the year? And I think as well, a key here is, most charities will assume they need to hold reserves by default, but it might not be the case for your particular charity. So it's important to work through that. For larger charities, it's a more detailed. There's kind of a 6-step process that you should work through. And again, that first of all, that's kind of understanding the nature of the funds that you currently hold. So that's coming back to your unrestricted, restricted endowment funds. What restrictions are there around those? Are those endowment funds, are they permanent endowments or are they expendable endowments? The next stage is then looking at your fixed assets and identifying the functional assets, those ones that are used in the day-to-day delivery of the services that you're providing. You then need to look at understanding risk in your charity. What elements of your funding have a greater level of risk, and that can be you're very reliant on donation funding, grant funding. So there's a higher element of risk in your income, and reviewing those sources of income. Then it's also about considering the impact of future plans and commitments that your charity may have, and that may be spending commitments, service commitments, perhaps expansion of your activities, expanding geographically, expanding the nature of what you're delivering, and it's taking all of those factors into account to agree a reserves policy. And I've certainly seen some charities, approaching it that way by, identifying, looking at the income and saying, well, there's an element of here of our income that is very lumpy. There's a higher risk element. So that's the first part of our reserves policy. The next part might be the nature of our activities. Because of that, if we weren't able to generate that funding, there'd be an element of cost that we'd have to incur in terms of perhaps some sort of staff redundancies, things like that. So building in an element for that we've got to have the reserves that cover that. And then also with the risk around income, what other working capital would you need to support any delays in that income? Looking at the profile of fixed assets, what expenditure are you going to have to incur to keep all your functional assets in good operating order, and any exceptional items around that, and building in an element of that to your reserves. And then probably, again, adding in some kind of contingency there as well. And so coming at it, rather than coming at it from a certain month's expenditure or a certain percentage of income, it's actually coming down to a quantifiable figure, or potentially a range of figures, depending on just sort of some of the sensitivities in that risk analysis and the questions that you've answered in going through that process. And I put there the good, the bad, the ugly. It's just a few examples from sort of reserves policies I've sort of read, or comparisons back to it. A reserves policy, one charity I read where it was talking about months expenditure, 3 months expenditure. Okay, that was fine. Provided a little bit of narrative around why they picked 3 months expenditure. Delays in government funding. This received an element of government funding, so they talked about delays in government funding, but also pressures on external funding. But then when they compared their actual reserves policy, this is where it all got, I suppose, a little confusing, because their actual reserves were quite low. Their free reserves were quite low. They were then factoring in restricted funds, into this reserves equation, because sort of citing that, well, actually, a lot of our restricted funds support our day-to-day activities. So on the face of it, I suppose, not an unreasonable explanation. But when you dug into the detail of those restricted funds, none of those restricted funds supported the day-to-day activities. They were all essentially capital funds and were being had been provided to the charity to support some key capital projects that they were going to undertake. So actually, kind of had no relevance to the reserves policy that they had set. So it's just about that comparison of your actual reserves to your reserves policy, ensuring that you're really comparing like with like, and that the explanation is understandable from the layperson reading your accounts. So I think what the Sorp presents here is just a real opportunity to revisit your reserves policy. Kind of take that approach, follow the guidance in CC19, and tackle it from a different perspective, and see what you come up with. How does that compare to the existing policy that you're using? A couple of other other items are around financial review. Legacy income. So this is just something that a bit of extra emphasis in the financial review section is that you should provide details of any material legacy income that you've recognised in advance of the funds actually being received. So under legacy accounting, you can recognise in certain cases you can recognise the legacy income in advance of it actually being received. Now, because of the nature of legacy activities, that could be quite significant. So it could show that actually you've your funds at the end of the year are quite significant, but the cash funds could be much lower because of this. So it's just important to provide that information. Now, it is a should, so it's a kind of encouraged disclosure. But I think it's important for the readers of the accounts, those stakeholders, and just being able to again provide that linkage of the narrative of your report back to the numbers, and also encourage to kind of consider giving details of the expected timing or other uncertainties. And this could lend itself not just to legacy income, but it could be other income, other grant income. There are circumstances where grant income or other income, again, may be recognised in advance of having been received. And again, just important to make that clear, or also any other uncertainties that might be around that particular legacy or income coming to light. The next part in the financial review that is just a little more sort of enhanced here is around going concern. So really topical, obviously, across the sector the last few years, and continues to be. So what you've got here, if you're a charity that has no reserves or very limited reserves, then you must now explain why the charity is still a going concern. What are the key decisions, information that the trustees have used to assess why they're satisfied that the charity is still a going concern and that the accounts can be prepared on a going concern basis. And then it's also really important to explain any material uncertainties around the charity's ability to continue as a going concern. So this can be things like major contracts. Again, if you have a core part of your funding is a contract with government, local authority to deliver services, and that contract is up for renewal in next 6 months from the reporting date. There is an uncertainty around that, or potentially an uncertainty. So again, really important that you're just providing the detail around that as part of that going concern narrative. And I think, again, it's this marry up. I keep saying it, this marry up between the narrative and the numbers. Again, you read a lot of trustees' report and you look at the accounts and think, well, actually, things are pretty tight here. But actually, when you look at the going concern accounting policy, you look at going concern financial review in the trustees' report, and there's almost nothing said. It's silent. That's not what we're looking for now. We're looking to be able to give the readers, the users of the account, a real understanding of where you are and what are the risks and uncertainties around that going concern position. And then the final fact here is just for larger charities, your tier 3 charities. Again, it comes onto the going concern point a bit in a way, is explaining any factors that might affect financial performance going forward. So again, think here changes in funding, major contracts, agreements coming to end, as I've just said, perhaps changes in legislation, perhaps changes in beneficiary demographics. If you're a school, it might be changes in pupil numbers that are going to have potentially a key impact on financial performance going forward. So again, important, really important, and you must explain that in your trustees report. Right, just the last section then here, I think I'm going okay, is just around sustainability. So as Glenn said, for your tier 1 and 2 charities, it's a really light touch approach. It's very much an encouraged disclosure. Trustees may choose to explain how the charity is responding to and managing environmental governance and social matters. And as Glenn said, that I think the important thing here is that trustees are encouraged to consider the needs of stakeholders when reporting on this. So again, thinking about who your stakeholders are, but also the nature of your activities. If those, managing environmental and perhaps even social matters is very key to your charity because of the sector you're operating in, then potentially that's going to be something stakeholders want to know about. So it may be that although it's only encouraged disclosure, it may be a really useful disclosure to start building into your trustees' reports. For your tier 3 charities, it's a much more detailed approach. Those charities they must provide a summary of how the charity is responding to and managing ESG. So what potentially is that going to look like? Well, I think the reporting here is going to evolve. This is kind of new territory for a lot of charities, and there's been some sort of studies in recent years about what number of charities, what percentage of charities do make any comment about ESG in their trustees report. And I think, as I said at the beginning, charities now they're operating in an environment where ESG is much more kind of under scrutiny from public, from funders, and about driving change. So I think we'll start to see more and more charities disclose this, and I know from a couple of my clients that voluntarily include some sort of additional sustainability narrative in their trustees reports, and it's really encouraging to see that. So in terms of environmental, well, the Sorp set out that you could provide some details of KPIs that you use to assess your progress against some targets that you've set to use to manage climate-related risks. So if you do that, that's great. If you've set these targets, you've got to provide a description of how you've calculated the KPIs around that, the targets, and then just providing details around how you're kind of tracking against that. So that's what you could do in the environmental space. I think as well in the environmental space, obviously Glenn's mentioned that if you're, limited company, then obviously the streamlined energy carbon reporting requirements come in here, and obviously that's a really useful way if you're a larger company of being able to, demonstrate, KPIs against for environmental factors, and if you're in that tier 1, maybe not tier 1, but that tier 2 space, I've certainly seen some what would now qualify as tier 2 charities kind of voluntarily including their streamlined energy carbon reporting data. So again, that might be something that's to demonstrate that the charities look at doing. Around governance, well, the information you can provide here is sort of details on your privacy and data security, details around cyber security, how how you manage cybersecurity, how you protect against that, and as Glenn said, there's a bit more narrative around that in the trustees report. So again, links nicely there. Can talk about business ethics, investment ethics, your governance structures, and oversight as well, and perhaps how some of those have evolved and developed over the year. And then in terms from the social side, you can look at providing details on things like employee engagement and well-being, employee diversity and inclusion, board diversity and inclusion, gender pay gap. I mean, all limited companies with more than 250 employees obviously have to provide gender pay gap reporting, but again, something that can be useful to include or provide the link to that in your trustees report. And also just setting out how your charity supports its local community. The work that you're delivering is going to be delivered to elements of your local community or much wider community. So being able to show how you're supporting them and engaging with volunteers in your local community. So I think certainly, an area that we'll start to see develop a lot more in trustees reports. Just to help you with that whole kind of sustainability ESG piece, just a signpost here as well, the Charity Governance Code. It's been refreshed relatively recently. It is a key source of best practice across the sector. It's not mandatory. It's kind of a apply if you want, if you wish, but it's based on eight sort of core principles, which support the kind of behaviours, to support your achievements. But it provides some really useful kind of example policies, practices, processes in those areas. And I think it's something as well. A lot of investment's gone into that, and it's something, if you're haven't used in your charity, I'd certainly recommend that it's something that you do perhaps on board away days, is just working through that charity governance code, looking at those principles. How do we measure up against those principles? What are the areas that perhaps we need to improve, but being able to report against that. So overall, a lot of new changes, a lot of similar content, but I think this is a real opportunity. It's a new opportunity to really refresh your trustees report. So kind of almost start with a blank sheet. Look at what you've reported in the past. Do a critical review of what you've included in the past. Is that really satisfying what the new Sorp's focusing on? Avoid boilerplate narrative. Look at the structure, the clarity, relevance of your report to those stakeholders, those key users of your accounts, and really ensure that you're getting that linkage from the narrative to your numbers. Keep coming back to that. Does this narrative, is this explaining our numbers? Is it explaining what we've achieved? Focusing on the impact the charity has delivered, that's it's the public benefit test. So I see that as a really key development, and something to really focus on. And just ensuring it's clear and concise. It doesn't, a trustees report doesn't have to be 30, 40, 50 pages long. It can be clear, concise, to the point, but just provide real clarity. But just to say, it's not something now under the new Sorp. It's not something to come along to your, March 27 accounts, or something like that, and start planning to do it then. It's start planning now, planning early. Make sure you understand the new elements of the Sorp. Have you got the systems and processes in place to start capturing some of this information that I've talked about, particularly around the impact reporting? Looking at your reserves policies. Start planning now. Don't leave it to then. Remember, it's a collaborative process, and above all, I think just remember that good reporting, and this is what the whole trustees report is about, is to explain what the charity set up to do, how it's going out about it, that your activities, what you've actually done, which are obviously the outputs of your activities, what you've achieved, being the outcomes, and what differences it made, which is the impact. And if you do all that, then I think that will be a really brilliant trustees report. And that's it. I think we've got questions now.
Yep. Thank you, Andy. Um, Had a couple of questions come in, but that's it at the moment. But we'll go through those. But if anyone else does have any questions at all, then feel free to drop them into the chat or the Q&A. So we'll get through as many as we can, but follow up on any that we don't do. So the first one that's come through says, if our end of year is the 31st of March, should we incorporate these changes into the report we are currently working on? I think on that one, I would say there's no kind of requirement to, as mentioned earlier, the new SORP's effective for periods on or after 1st of Jan 2026. So you don't have to comply with the new SORP in your current round. And certainly there's kind of no sort of formal way of early adopting the new SORP either. I mean, if you did early adopt certain aspects, you'd kind of be caught by all of them. You'd have to bring in all the revenue recognition and lease accounts and everything else. So certainly wouldn't suggest rushing into that. So I think if you asked the writers of the SORP whether these things they're suggesting within that trustees report in particular, would they encourage people to include those aspects in their reports for this year? I think the answer would be yes. That's the direction that they want the trustees report to go in. Want this information to be included and disclosed and give a really kind of overall view of the impact the charity's making. I mean, there's nothing that's brought in new that would be would go against the old SORP. It's all very much trying to improve it and develop that reporting process. So I would say, yes, by all means, if you wanted to bring in parts of that into the new report, maybe not, don't badge it as being compliant with the new SORP, but certainly the content and what they're trying to achieve as part of that, I think would be worthwhile in this year's report.
And I think probably just sort of adding on to that question, Glenn, is about perhaps as well in writing this year's trustees report, even if there are elements that you don't bring into this report, but having that in mind for next year's report. So particularly around some of the impact aspects, and particularly where you might want to show the impact that you've had this year relative to last year. Have you got that information? Can you capture that information now this year in putting that trustees report together? Even if you don't put it in the trustees report, but you've captured that information, so potentially you're able to report on that next year in terms of showing a trend, a positive trend.
Yeah, definitely. Right, we've got an education one here. I'll pass this one to you, Andy. So in a school, would a separate PTA be regarded as a general or a non-general volunteer?
A general PTA, well, the PTA is separate, most probably separate organisation, separate registered charity. So yeah, the volunteer or non-general volunteer, it's more kind of focused at the general volunteers is very much focused at individuals. Non-general volunteer, again, more focused at individuals, but you might have particular organisations. A trustee, one of your trustees may be a solicitor, and happens to provide all your legal advice free of charge. So again, they would fit the category of being a non-general volunteer. So I think a PTA is not really going, in my view, is not really going to be either. It's PTA is almost a separately a funder to you, although they are fundraising themselves. That's them as a separate entity. They're then providing the funding to you, the school.
Yeah, I'd agree with that.
That's good.
Will there be feedback on the compliance of reports with the new SORP? Question that's just come in.
I would think so. It might take a year or two. Certainly, the Charity Commission did publish some results relatively recently. I think this was from trustees reports from probably about 18 months ago. I think it was sort of 23, 24 reports. So they looked at published some statistics about charity trustees reports compliance with existing elements of the SORP. So yeah, I would say definitely there will be. How quickly that comes out, or maybe there'll be some kind of initial thoughts from early rounds of new trustees reports that have been submitted under the SORP, and probably focusing on some of those key headline areas that Glenn and I have talked through, particularly around impact, particularly around that financial review, and particularly around sustainability.
Yeah, yeah, I'd expect that as well from the kind of the wider regulator piece as well. But I
Yeah,
think individually, I mean, certainly what we'll be looking at with our clients for next year when they are complying with it for the first time is certainly focusing on the musts within that trustees report, and where those musts need to be complied with. Have they updated the narrative that goes in those trustees reports to consider these developments and areas? So from a compliance point of view, making sure they're in there. But I know I'll certainly be taking an interest in terms of how they've considered the shoulds and whether they are including information in there. And I'm sure you will as well, Andy.
yeah,
Um, and sort of having those conversations and challenges and saying, yeah, I can see what you've done here. Do we think it goes far enough? Do we think you should embellish on certain aspects a little bit more? Um, so yeah, you'll probably get some sort of less full market feedback from your auditors as they're reviewing those as they go along.
yes, yes. I think in answer to that question, yes, yeah, absolutely. I think now, definitely with as Glenn said, much more prescriptive around those musts, and we're particularly used to that with the education sector, academy sector, and the DFE are very prescriptive around a lot of musts. So there is an onus, although our audit report doesn't cover the trustees report. We still have to report on whether it's consistent with the SORP, it's consistent with legislation, and also that it's consistent with the financial statements. So yeah, it's an area we'll certainly focus on, and we'll be able to point out areas where maybe it needs a little more narrative, or isn't compliant, and what's the best way of ensuring that compliance.
Um, Another question, which I think is a little bit linked to that one, asking whether the Charity Commission will be undertaking any due diligence on compliance on the annual trustees report. Um, I say, I think they will be interested. I think when the accounts start to be submitted under the new SORP, I'd like to think they're going to review some of those to see whether they are compliant, and if there are some themes that they're seeing as part of that, I would hope that that would be reported out, to see the feedback on that.
Yep. No, I'd agree, definitely.
Yep. And then a comment, do we generally notify existing clients when there are changes to the charity SORP? Yes, very much so.
Yeah.
So certainly when there's a new SORP, as now, putting on these webinars, looking at the key areas. But yeah, if there's smaller changes or any updates, or even when these reviews come out, if there are any sort of thematic themes coming out of that we can sort of share with clients, we certainly will be doing. But also where these changes specifically impact on a client, if there's something that is really relevant to them, more from the reporting point of view in terms of the income recognition, lease accounting. If it's going to have a real big impact on them, then yes, we'd be reaching out and speaking to them very early, to make sure that they are happy with the changes and what needs to be done to ensure compliance. Right. We're at the end of the questions at the moment. So if anyone else does have a question, do feel free to drop it in. But if not, thank you very much for attending. I hope you found that useful. Did mention that the slides would be shared after the webinar, so we'll make sure that they are shared with everybody, if you do want to revisit any aspects of those. But yeah, no, thank you very much. Good luck writing your new trustees report when you get to the new SORP.
And
And
we
any
look for,
questions, yep, let us
and we
know.
look and we look forward to reading them when they come through.
Absolutely.
Great. Thank you, everyone.
Thanks, everybody.